Let's move to the third chunk of that apple, of that pie. I keep referring to apple. Apple is good, whether it's in ordinary form or... Which one do you eat?
Apple is good.
Apple is good. Yeah, the natural one.
Yeah, sure.
Not one made into a pie.
Not at all.
Yeah, okay. But so, an apple a day keeps doctors away.
Sure.
Doctors won't like that, but of course, that's nature. 19%, that's the green shoot. What sector is that? So
that is others, so which is basically a lot and probably not disclosed by the MBS. But another interesting part is the real estate, which is 13%.
Yeah, that's the orange.
The orange one. It stands on its own, and it speaks to affordability on the end of the consumers. So some consumers could not really afford, some flats or some houses, and then they had to vacate. As we speak, we have about 35 to 65% reduction in occupancy rate across that industry, particularly for big shopping malls, largely because of affordability. And also bearing in mind, we don't really have a strong or a good mortgage, financing market in this country. So it is relatively hard or difficult for consumers to be willing, to buy more or to stay in rented apartments that are expensive because of all those factors. That's
very steep. If I take the next one, that's 3.5%. The real estate sector was 3.5% in the water in the second quarter.
Yeah, yes.
That's quite. Then let's try and wrap it up. In terms of professional or scientific and technical services, that's 13%.
Yes, that's about 7%, and so that speaks to also partly FX driven, because there are some that you need to import materials, for you, like computers and co. So that you are able to do your business in terms of either advising or consulting on a bigger basis. So with FX not available at that time, really couldn't do much. So we saw a bit of contraction on that front too.
So put together, it looks like, well, between trade and services, if you want to use that as a bigger basket to put everybody in, we need to see that this exit for recession, we may need to perhaps find another phrase to describe it.
So maybe yes, but I think there are hopes around the corner. Number one to think or talk about is interest rate outlook. If interest rate is lower in the coming quarters or in the coming months, that should be positive for growth. Number two of them is FX availability. We are seeing that currently. So what we are looking for is sustainability and further improvement in supply. If that materializes, that should also play out positively. And probably the third aspect of it is the risk appetite of banks. So banks are really not willing to lend because of high non-performing loans for them. So if they begin to lend more to the private sector, we should see a pickup in the trade subsector of the Nigerian economy. And by then, we'll be talking of a strong recovery in the economy.
Well, some of your colleagues says this is a tentative recovery. FBN says there's no momentum for a strong recovery.
And I agree.
You agree?
I agree. And this is why I said, if we have these three key factors, turning positively in the next couple of months, we could begin to talk about strong momentum, could begin to talk about sustainable growth, we could begin to talk about improvement in the next coming quarters in terms of growth outlook for the country. But in as much as we have high interest rates, we have FX supply difficulty, or we have risk aversion in terms of banking sector lending to the private sector, we will probably remain under the water in terms of economic growth.
Yeah. You remember, I'm sure you were outside there listening to the analogy from Chikamodi about falling into a well and the water.
And I absolutely agree with him.
Okay, thank you so much. Hold on a second. We're going to take you through the last part of the program in terms of this market. How do we trade these GDP numbers? Can we make money from this soft recovery? Let's come back to Tajuddin from Chapel Hill, Denham after the break. So I'm taking the second quarter GDP to the marketplace and see, is there anything in there for those who trade? Tajuddin Ibrahim, the head of research at Chapel Hill, Denham. You have traders?
Yes, we do.
Yes.
A good way to probably trade the market is to take a look at the banking sector. The GDP of the banking sector grew by 10.5%. That is the financial and insurance sector. And in there, the major chunk of that is the banking sector. So that is number one. And if you want to take a look also at it from a trading number standpoint, in terms of liquidity, the banking sector presents greater opportunities in terms of ease of access to the market, in terms of coming into the market, and also getting out of the market because of high level of liquidity of stocks in that sector. That is one sector that a number of investors, largely even foreign, are focused on in terms of getting access to the Nigerian stock market. The second sector I'll probably argue in favor of is the consumer sector. Consumer sector, and in this case, I will be careful and pick or talk about companies that are able to pass price increases in the current difficult environment. So they are the likes of Guinness, the like of PZ, were able to pass price increases to consumers with little or no kickback from consumers. Those are good stocks to look into. And the third element of it, to my mind, is the cement sector. It's contracted in the second quarter. That is not surprising. It is partly reflective of seasonality because during rainy season, you don't get to see many or much construction activities going on. So there was a bit of a slowdown. But there's going to be a pickup towards the end of Q3 and particularly in Q4. A strong recovery should come in. So I think those three sectors are good for investments in terms of the GDP numbers reading.
So put together, we can say, well, from an broad macroeconomic point of view, we're not really, we're technically out of recession. Let's use that phrase.
Yes.
But while I can't eat this GDP, I can invest it.
You can invest it. And as I said earlier, we looked at sectors that are currently down. And as I said to a number of clients, you invest when sectors are down. And you play a catch-up when there is a recovery, not when they are already recovered, because you get in there and be paying a premium, because some investors have gotten to the sector, investing in it while it was down and hoping for a recovery. It is not like the economy is closing down. It is not like there's not going to be a market tomorrow. It is not like there's not going to be a Nigeria tomorrow. It is just that we are suffering from short-term challenges. And if one bears in mind opportunities in those sectors that have seen some kind of contraction, invest in them ahead of a recovery, then you benefit when the recovery materializes. So an example, for instance, is the real estate, down by 3.5%. And a UPDC play will be a good one in this regard. So it is down this moment. You invest in it because prices are low as we speak. Valuation is attractive. So if you invest in it, what you could see upon recovery is a rally in the share price.
For about a minute or two, we're going to be done with the GDP. But by this time next week, we should be talking about something else, or just by Monday, and that will be inflation and the MPC. How much of this do you think will still move forward with part of what you call the trading sentiment or trading themes for traders and for investors?
Well, I think it is more of the, maybe I didn't get that.
I was looking for, I wanted to be done with the GDP. Shall we move on to August inflation report that is just going to be out in the next couple of days, maybe a week from now. Then the outlook on the central bank MPC meeting. Okay,
so if we take a look at inflation, inflation most likely is going to stabilize. So we've seen a decline to about 16.1% the last month. So this month we'll probably see like around 16.1 and probably max of about 16.2. Which is still fairly stable because the low base impact has sort of fizzled out. And also, but there are one or two elements to bear in mind. Number one of them is lower diesel prices. Number two is the harvest season for crops, which would be positive for the food index. Those two could support somewhat, and that is why I'm looking for flat. In terms of the MPC, my sense is they'll probably will leave the indicators unchanged.
Thanks for being part of the conversation this week. And we're wrapping up the week with you here on the program. Tajuddin Ibrahim, the head of research at Chapel Hill, Denham. Thank you, everyone. Let's lay back a little bit, shall we, over the weekend, then come back bright and early on Monday and continue a different conversation across some of the things you've heard. And, of course, we're going to squeeze in what you call the political economy. I'll see you at the other side of the weekend. Bye for now. Have a great weekend.